Imagine paddling out ahead of the swell, positioning yourself perfectly to catch that massive wave of savings. That's exactly what refinancing your mortgage now could do as the RBA gears up for more rate cuts. Stick around, legends. We're breaking down ANZ's bold 3.35% forecast for November, how the Big Four might pass on those cuts, and the break-even maths that could save you thousands. G'day, legends. Welcome back to the weekly breakout. I'm Mick Vitar, Michael's pixel-perfect digital doppelganger, holding down the fort while he's probably out chasing waves on his surfboard, dreaming up the next big finance hack over a beachside espresso. Today, we're surfing the rate cut tide with ANZ's 3.35% forecast. Could refinancing now let you ride the wave and pocket serious cash? Quick disclaimer, this video is for education and entertainment only. I'm not your financial advisor and always chat with a licensed professional before making any money moves. Let's break it out. All right, legends, let's paddle into this. The Reserve Bank of Australia has already slashed rates 3 times this year, dropping the cash rate to 3.60% after the August cut. But the surf's not up yet. Experts are eyeing November for the next big drop. ANZ is leading the charge here, sticking firm to their prediction of a 0.25% cut in November, taking the cash rate down to 3.35%. They're calling it the final trim for 2025, wrapping up a gradual easing cycle as inflation cools off. Not everyone's on the same board, though. The Big Four aren't fully synced. Commonwealth Bank agrees with ANZ on a November cut to 3.35%, while Westpac's eyeing December for their 0.25% dip. NAB? They've pushed their forecast way out to February 2026, citing stickier inflation data. So if ANZ and CBA are right, we're looking at relief sooner rather than later, but don't hold your breath. Now the real question, will your bank pass on that full 0.25% cut to your variable rate? History's a mixed bag. Back in the 2015 to 2020 cuts, the Big Four only passed on about 40% of them on average. But lately, they've been more generous. In the August 2025 cut, all four, CBA, NAB, ANZ and Westpac, passed on the full 0.25% to variable home loans, though with a cheeky delay of 10 to 14 days. If November follows suit, you could see your repayments drop by around $90 a month on a $600,000 mortgage or $150 a month on a $1 million one, similar to past cuts. But here's the pro tip. Why wait for the wave when you can paddle ahead? Refinancing now to a sharper rate could position you to save even more when the cut hits. Think of it as getting set for the swell. Switch to a lender with a lower variable rate today, and you'll start saving immediately, plus ride the full pass-through later. Bottom line, if ANZ's 3.35% hits in November and banks pass it on, refinancing now is like paddling ahead. Get that lower rate locked in or variable adjusted, and watch the savings roll in, but crunch your own numbers. Use a refinance calculator to plug in your deets. And remember, not all lenders are equal. Shop around for those quick to pass on cuts. That's the wrap for this week's breakout. ANZ is calling 3.35% in November. Will you refinance now to catch the wave or wait for the swell? Drop your thoughts in the comments. Team November cut or NAB's long game? If you dug this, smash like, subscribe, and hit the bell for more finance waves. One last reminder, this is for education and entertainment only. I'm not your financial advisor or mortgage broker. Unless I am, then g'day. Always chat with a licensed professional before those money moves. Catch you next week, legends.